Hey guys, welcome to today's live trading session. My name is Ebuka Ambrose, and today we're going to be looking at we're going to be doing some analysis. We'll also talk about pairs. I'll take your questions. But before I go into the content of today's live trading session, you can go ahead and type your name and where you're watching me from in the comment section below. So go ahead and type your name and where you're watching me from in the comment section. You can also go ahead to tell me if this is your first time watching an Octa FX live trading session. Okay, Ojo Olakunle, welcome. I have someone from India, welcome. Fidelis from Nigeria, welcome. Charles Nizianya from Nigeria, welcome. Bongani from South Africa, Chisom from Nigeria, Isiaka from Lagos. Somadina says it's his first time. You have Panu from India, Chi Ike from Libya, Oluwase from Nigeria. Okay, I have a lot of South Africa, Nigeria, Port Harcourt, Nigeria, Benin. Massive welcome to you guys. Obviously, if I go ahead with the names, I'm not going to finish the trading session today. But yeah, welcome every one of you. If it's your first time, what we normally do in the live trading session is to just analyze the market and place trades. Today, most of the banks are closed due to Good Friday, but if there are any opportunities, of good setup in the market today, then I'll just catch it for you guys. Okay, disclaimer: any opinion, news, research, prices, analysis, or other information discussed in this live trading session or linked to this presentation are provided as general market commentary and do not constitute investment advice. Trading is risky. Okay, so before I go into actually analyzing the market, I know I have a lot of beginners on this live trading session right now, and it's important that you don't just come into the market and you start clicking on buys, clicking on sells, buying and selling. You need to actually have like an approach, like a framework that would guide or that will influence your trades, right? So I'm just going to talk about steps to approach the market, which I'm also going to use to analyze the market today for you guys. So the first approach to analyze the market is for the market is to approach the market with a positive energy and mindset. You don't want to come to the market because you want to revenge a trade from yesterday or something. No, you want to come to the market. It's clear-sightedness, practical mindset, that positive energy. And you also want to suppress your fear of missing out trades. Opportunities would always come in the market, right? There would always be opportunities to buy or sell an instrument in the market. So you don't necessarily have to get scared that if you don't take a trade today, then you may not see an opportunity to take that trade the next day, right? Opportunities would always come in the Forex market. So suppress your fear of missing out on trades. The third one is to pay attention to fundamentals. So fundamentals is like the news aspect of trading. I mean, we're trading currencies, right? And these are currencies of countries. So the events and the things that happen in that country should be of our interest. We should actually pay, attention to events and news and happenings of a country, because those events would also affect the currency of that country. Okay, so as of yesterday, we had some. Let me just go straight to the Octa FX. Economic calendar, and it's important that as a beginner trader looking to analyze the market, looking to place trades, you pay attention to the fundamentals. So if you go to octafx.com, you go to analysis and education, and then you want to go to economic calendar. Yesterday we had the unemployment rates released from the Australian Bureau of Statistics. We also had ECB, the European Central Bank press conference. Let me just quickly go to yesterday. So yeah, yesterday, like I said, we had some medium and high impact news on some currencies, and like I said, the events that happen in a particular country affect or influences the currency. So you want to take advantage of the economic calendar provided by OctaFX to actually understand the strength or the weakness of a currency. Okay. All right. So that's on paying attention to fundamentals. The fourth thing that you want to do, or the fourth step that you want to take, is to analyze the markets using a framework. Like I said, you don't just want to come into the market and start buying or start selling. You want to have a framework which is going to include market structure, key levels, entries and exits, which I'm going to explain. And then lastly, you want to apply proper or solid risk management, okay, on your trades. So these are like the steps that you can use to approach the market. I said I was going to explain the market structure and the entries and the exits so you guys can understand better. So the main reason of having a framework is that it's going to help you identify areas on your chart where buying pressure and selling pressure could kick in, right? Like I said, you don't want to come and start clicking buying and selling just like that, blindly. You want to have a framework that would guide you. If you want to build a house, you would have a building plan, right? You know where you're going to set your parlor, your living room, your bedroom, your whatever, your kitchen, so you're definitely going to have a plan before you can build the house, right? The same thing, you can apply the same thing to the Forex markets. You need to have a framework that would influence and guide you to place trades. So market structure basically helps you understand and define the current market condition. Market structure would give you, buying and selling opportunities. Like I said, it's going to tell you or help you identify areas on your chart where buying and selling pressure could kick in. Now, I didn't say this earlier, but if you have questions, in the course of this live trading session, you can go ahead and type your questions in the comment section. I'll check the comment section to answer your questions. So how can you identify market structure? You can identify market structure with the candlestick chart, with some chart patterns, which I'll show you guys. You can also use trends and ranges to identify market structure. You can also use supply and demand. Okay. The next approach is to identify key levels, which can be identified by trend lines. Key levels can be identified by trend lines, which you're going to use to identify uptrends and downtrends. Key levels can also be identified using the moving average and support and resistance. And then the next thing you want to do is to determine your entry point, right? If you don't know what support and resistance is, support is basically an area on your chart where buying pressure could kick in. So support is simply an area on your chart where buying pressure could kick in. Resistance is an area on your chart where selling pressure could kick in. Okay, so just to give you guys a quick illustration of what support and resistance looks like, you could have a market that probably ranges like this. And then, like I always tell you guys, if you want to really understand how if you want to really understand the things that are being defined in the market, if you want to really understand how it works in the actual live chart, all you have to do is to take the definition of what you've learned and just apply it to the chart, right? So support is an area on your chart where buying pressure could kick in, and obviously the support is going to be here, because when you hear of buying, you're buying from down to the top side, right? So this can be an area of support. And if you notice, whenever price got to this point, there was buying pressure kicked in and the price went up. For resistance, the same thing, just take the definition, apply on your chart. So it's going to be the area where selling pressure could kick in. And when you want to sell, you're selling from top to down, right? So you can identify these areas as your resistance area. What happened whenever price got there? It was rejected, selling pressure kicked in, and the market came down. Okay, when support is broken, support can now act as resistance. When resistance is broken, resistance can now act as support. For example, if price breaks below the support, then this support becomes the new resistance for this market. The same thing goes for the resistance. If price breaks above resistance, then this resistance serves as a new support for the market. Okay, so that's just to give you guys a quick illustration on support and resistance so that you guys can quickly understand. Okay, so for entries, we're going to be using candlestick patterns, moving average. There are other things that you can use to determine your entries, your Fibonacci levels, but for this live trading session, I'm going to be using candlestick patterns and moving average to identify entry points. Okay, for exits, we're going to be using swing highs and lows, and we're also going to be using stop loss and take profit for our exits. And like I said, market is quite illiquid at the moment, so if I see opportunities to trade, I'm going to trade, and we're going to be using risk and reward and stop loss for our risk management for the trades. Okay, so let's get to the part where you guys like the most, the part where you have to analyze and hopefully take some trades. Okay, somebody says I seem to teach a lot of basics. Some of us need real trades. You don't expect me to just trade without analyzing, right? So I'll have to analyze the market first and then trade. So I guess this is the part where you pay attention, so you understand. So the first pair I'm going to analyze is EURUSD. Oh, I actually have some drawings on the EURUSD right now. Take this to the side a little bit. Okay, EURUSD. So when you approach the market, what you want to do is identify, market structure using your trend lines, identifying the key levels. But first, you want to go on the higher time frames to point out what the market is doing, right? You want to go on the higher time frame. The higher time frame shows you, the overall direction of the market, right? And obviously, you're seeing series of lower highs and lower lows on EURUSD, so it's safe to say that EURUSD is on a downtrend. For a while now, the European Central Bank has viewed inflation as temporary, and no plan was presented to curb the inflation. EURUSD is currently at a 2-year low. The last time EURUSD was at this point was in 2020, which is right, April 2020. So this is a 2-year low. I still see downside potential for EURUSD. I'm not really seeing a lot of buying pressure right now on EURUSD, so I can still EURUSD or the pound dollar can potentially get down to 1.06 in the coming weeks. So I expect, or I can see EURUSD potentially go to the downside. Now, if you're looking to trade the bounce, because EURUSD is currently at a support level, right? Remember, you identify the key levels. If you're looking to trade the bounce, you'd actually have to wait for a confirmation. You actually have to wait for a confirmation. Remember, your confirmations can be candlesticks, can be some patterns, can be, you know, moving average. But you actually have to see some buying pressure at, or a consolidation and a breakout, probably from this resistance level, before you can say, okay, there could be opportunities to buy. If I don't see any, you know, buying confirmation or buying pressure on EURUSD, then I could potentially sell EURUSD, right? I'm just going to go to the lower time frames, the 4-hour time frame. Clearly, EURUSD is still trading, has started trading below the 200 moving average, so I still see potential downside, guys. Except there is a break above this resistance, probably breaks above the retest. Definitely, if it does that, then that's going to be a break above the 200 period moving average also, and I will not be looking to sell EURUSD again. But right now, I'm still seeing potential downside for the pound dollar, right? Okay, please, guys, if you have questions, go ahead and type in the comment section. I'm constantly checking to see if you guys have questions. The next pair I'm going to look at is the pound dollar. So the same step, all you have to do is to understand what's happening in the market, go on the higher time frames, know if the market is on a an uptrend, on a downtrend, identify your support and resistance level. You also need to identify if there's any chart pattern formation. You know, just basically understand what's going on in the market before you can decide to probably go on lower time frames, look for entries and all that. Clearly, pound dollar is on a downtrend, right? And it's also at a support level, which is here. Now, there's a bullish engulfing on the daily time frame, yes, but it was not followed up by any bullish candlestick. There was a rejection by the bears, so I can't really say that you should still go on buys or you should still go long for pound dollar right now, because there is no confirmation on that. I can't see any confirmation on that. As far as I'm concerned, from what I can see, pound dollar is still bearish. To confirm my bears, let me just go on the 4-hour time frame. Yep, so price is currently trading below the 200 period moving average, right? There was a retest. You can also use your trend lines to identify there was a retest at the 200 period moving average. Price couldn't break above it. Strong rejection at that, and now price is consolidating. I still expect pound dollar to get down to 1.298 for another retest. So if you're looking to go short, I'm just going to say that your stop loss should just be, above the previous swing high, which is here, and the take profit should be at the support level. Okay, and then if you're looking to go long on pound dollar, you probably have to wait for a breakout out of this trend line, breakout, a retest, and then if you notice some rejection if you notice some rejection, at that retest, then you can take a buy. Otherwise, pound dollar is still looking bearish to me. So what I'm just going to do is to go on the 1 hour time frame. Let's see, price is actually consolidating at this point, and I can draw a triangle, symmetrical triangle actually. So if you don't know about triangle patterns are basically continuation patterns. But one thing about triangle patterns is that, or chart patterns generally, you can only confirm chart patterns when there is a breakout. You can only confirm the directions after the breakout and a retest, and you see price moving in the direction of the breakout. But oftentimes they are not chart patterns. Triangle patterns are continuation chart patterns. Okay, so symmetrical triangle formation on the pound dollar. Like I said, I'm still expecting or I still see potential downside for GU right now. Alternatively, if you want to take a buy position, I'll just tell you to wait for a breakout from this resistance level, because price is actually consolidating on the moving average. So the only way I can confirm to take a sell on GE right now is if it breaks out and closes below the symmetrical triangle, the support line of the symmetrical triangle. So yep, that's on pound dollar. I have about 4 more pairs I want to check out or I want to analyze for you guys. But if you have your pairs that you trade, you can type your pairs in the comment section, and I am going to look at your pairs and analyze your pairs with you guys. Remember guys, the European and the US markets have been closed today. The banks are closed, most banks, due to Good Friday. So that's why we are seeing low volatility in the Forex market. But by Tuesday, full trading should return by Tuesday. Okay, the market for gold is actually closed. I think I'm going to look at gold. Probably that's the last thing I would look at. But the market for gold is closed. Okay, somebody says gold. Yeah, I'm going to talk about gold, but probably the last. I just want to look at currencies now. What's your entry? What's your entry? Okay, like I said, I don't think you saw the okay, well, for my entries, I use candlestick as confirmations. I also use moving average breaks as confirmations for entries, but majorly I use candlesticks. One way to actually perfect your entries is if you trade in zones, right? Because you don't want to get caught up in between the market, just like what's happening here. So let's say you placed a buy in between, your trade is just going to be bouncing at this point, right? Or if you wait for a breakout and a retest, probably upside or downside, and you trade at the retest, at least you're having more confidence, and you're having more confluences and confirmations that you can take that trade, especially when you see a candlestick confirmation. That's going to indicate rejection to the downside or the upside, depending on where the breakout or where the market breaks out. But overall, my overall idea on GU is that it's going to come down to test 1.2982. Okay, so if I see a breakout from this trend line, which is the support trend line for the candlestick, then I'll just probably hop on the trade at the the close of the second candlestick, and then my stop loss is just going to be, you know, above previous resistance. And then I'm looking to take my take profit. My first target is going to be at the swing low, which is here, and then second target is going to be here. Okay, GBPUSD. Yeah, I'm analyzing GBPUSD right now. So GBP AUDUSD. Okay, let's look at AUDUSD. So let's look at the Aussie dollar. Guys, the dollar has been strong for like 2 months now. So the pairs that are being traded against the dollar are actually on sales right now. If you look at the dollar index has been strong, has been in an uptrend. Look, since let's go to the daily time frame. Yep. See, for a very long time. Oh, actually, since June last year, it's been trading upwards, right? Okay, so someone said AUD USD. Okay, so the first thing you want to do when you come into the market is you go to the higher time frames. You identify your key levels. Obviously, the first key level I can see here is a very strong support for AUD USD, and this resistance right here. And then you identify with your trend line the direction of the market. Just going to do that right now quickly. Okay, so for AUD USD, the high impact news was released yesterday on AUD. The unemployment rate was quite negative, and what I mean by negative is it was high. I think it was the same as the last results, so that's negative for AUD. I expect AUD USD to actually still drop to test this trend line, and then a break out of this trend line is going to indicate that, okay, markets could potentially get down to this zone and get down to this zone, right? Let me put the indication for you guys. So I'm looking at AUD USD on the way to test this support trend line. A break below the support trend line can give me the idea to continue selling Aussie dollar, probably way down to this point. I could decide to take my first take profit after the retest. I decided to take my first take profit here and here. But guys, remember when you identify what is going on in the market on the higher time frames, you actually need to go down to the lower time frames to see if the market is still moving in that direction, right? On the 4-hour time frame, it's not really far away from this trend line, which is why I said that I potentially see a retest at this trend line, and then price could consolidate. When it gets down here, price could consolidate and break out to the downside, probably do a retest and come down again. Otherwise, after the consolidation, price can, if price shows me bullish signs or bullish confirmations with candlesticks, bullish engulfing, morning star, all that, then we could be looking at buying AUD/USD. But my idea, based on what I'm seeing right now, is that market or AUD/USD markets could make a retest. Let me clear all this stuff for you guys. Yeah, AUD/USD could make a retest at this trend line, break out, retest, and move down. Please, can you do an analysis for EURUSD? Okay, let me just put up EURUSD and then I'll answer the next question I just saw right now. Is there a need to analyze from higher time frames like weekly and daily if you are a scalper trading on 15 and 5-minute time frames? The reason why you need to start from top to down is because you want to actually get the overall direction of the market. On the lower time frames like 5 minutes, 15 minutes, market can just move wildly up and down. But if you go to the higher time frames, you can get the overall direction of the market, just like EURUSD I'm looking at right now. I've gotten the overall direction of the market. I can see that it's coming from a very strong bearish momentum, and now price is actually consolidating. So what you can now do is to identify your support and resistance levels. And we can obviously see that there was a rejection. This is the first time price tried to break, couldn't break. Second time. The third time there was a rejection. And what happened the last 2 times price tried to break above this trend line? Bounced back, right? So as someone asked about lower time frames, as a scalper, you can now go to the lower time frames to see if this rejection can give you like an indication to sell, or the price is consolidating, just like we have here. There's a rejection, strong rejection at that, yes, but I mean there is no confirmation to sell at this point because these are mostly indecision candlesticks. There's no strong confirmation that okay, there's strong bearish pressure or bullish pressure, right? But what you can now do is to identify the areas that price found it difficult, or price found difficult to break below or above, which I'm doing right now on the 4-hour time frame, right? And you just do that and you go lower and lower and lower and lower to the 15 minutes time frame. Price is actually consolidating on the 1 hour, and normally during a consolidation, there is always a breakout, right? Price cannot just move in one direction forever. So there's always a breakout, right? So if I'm looking to go long on EURUSD, which fundamentally I can't, or I wouldn't be looking in that direction fundamentally, because of the results and the news from the European Central Bank. But if I'm looking to go long, then I'll be expecting price to break above this resistance here and retest, show me rejections, and I'll continue. Otherwise, I'm just waiting for a breakout at this strongly formed support level here, and then I trade EURUSD to the downside, or potentially take my my first target at this swing low. For a 1-to-1. I take it all the way down to this strong level, this support level. But my first target is going to be the swing low. Let me indicate that for you guys. Swing low. Okay, so remember I told you guys that for your exits, you're using swing lows or swing highs. If you're taking a sell, then you can use the swing lows. If you're taking profit on a buy, you can use the swing highs. You can also use your stop loss and take profit to exit your trades. So someone asked, how do you exit? You can use swing lows, you can use your Fibonacci, you can use your take profit to exit your trades. Okay, so generally I still see potential downside on EURUSD. The only way I would not see a potential downside is if there's a breakout of this trend line and a retest and I see some rejections, then I know the price is going to go to the upside. Otherwise, I'm expecting a breakout from this support level, probably a retest till it drops down, a retest till it drops down. So I'll be looking to take targets at 1.585. I'll be looking to take profit at this first target, 1.585, and then my second target for my take profit is going to be 1.57140. That's for EURUSD. USDJPY, buy now or hold or close. USDJPY, let's look at USDJPY. That's the dollar yen. Oh, I think I have it set up on. Okay, so obviously you want to go to the higher time frames. USDJPY has been on an uptrend for a long time. It has been trading above the 200 period moving average since February last year, 2021. And there was a recent, there was a breakout from the previous high. If I go into the 4-hour time frame, I could see a retest. This doji candlestick here can be a retest. Let me just go to the 4-hour time frame and confirm that real quick. Yep. Yep, it was a retest. Yeah, so breakouts and retest, and since then price has been trading on this bullish channel right now, creating um higher highs and higher lows, higher highs and higher lows, higher highs and higher lows. Should you hold or should you close? This is the 4 hour. Okay. It depends on where you entered your buy. It depends on where you entered your buy, but I'm only going to depends on where you entered your buy actually, because this can be a correction for USDJPY to come back and make a retest at this trend line. But the only way I can confirm that is if it breaks below 126.23, and then I can confirm that okay, if it breaks below 126.23, then I can confirm that price is potentially going to come back to make a retest at this trend line. Otherwise, I still see potential bullish momentum for USDJPY. I still see USDJPY coming back to make a retest at 126.7, 126.65. Yeah. Can we download this video later? Yeah, the video is going to be available on the Octa FX YouTube channel for you to watch again. Let's look at CADJPY. Okay. Loonie Yen. So like I said, you come to the market to identify your levels, identify the trend using your trend line. This was a previous resistance level that has just been broken. Now, could this be a retest to continue to the upside? Well, I would have to see confirmation for that. Otherwise, let me put up my RSI. Otherwise, this could be an RSI divergence actually. So I'm just going to wait out CADJPY to see if it successfully breaks below the low of the previous candlestick, which is at 100 yens. Yeah, and then I could potentially see CAD-JPY coming to the downside to make a retest at 99.72. So I'm just going to wait CAD-JPY out and see if it breaks below the low of the previous candlestick. If it doesn't and it breaks above it, then I should be looking to buy CAD-JPY. Okay, one thing about trading is that if you don't see a confirmation, you can always wait it out, right? You don't trade for the sake of trading. Don't trade because you just want to trade, right? The process gets interesting. The practice, the whole practicing and analyzing gets interesting when you're actually seeing results from your analysis, right? So if you run an analysis on trades and you're actually making profitable trades from that analysis, even if you're making like 7 profitable trades out of 10 analysis, that's good. You're making profitable trades out of your analysis, right? You don't want to just start trading because or for the sake of trading. Okay, thank you very. Yeah, you're welcome. You're welcome. Let me do this. How do you see confirmation before entering a trade? So, to answer this question, I would just say you can't just use one confirmation. For example, if you're someone that likes to trade with indicators, you can't just trade based off um, what one indicator tells you, right? You need to have like multiple confluences. You need to have multiple confirmations. If your trend is in an uptrend, your indicator is giving you uptrend signs. Your indicator is giving you ideas and opportunities in the upward direction. Probably you're using a moving average and you're seeing multiple retests above that moving average. You can now use your candlestick patterns for confirmation on that trade, right? So you don't trade um, indicators, chart patterns, candlestick patterns. Don't trade them in isolation. You need to have like multiple confirmations and confluences. It's just going to give you extra confidence to take the trade. Okay. I'm going 1 hour on card JPY. So for card JPY, if price makes finds it difficult to break above this above 100.33 and I see rejection signs, probably some shooting star or doges, then I'll be looking to sell card JPY. The only way I'm going long on card JPY is if it breaks above this previous high, makes a retest, and then so that's the only way I'm going long on card JPY. If it breaks above this previous high, then I'm going long on card JPY. Otherwise, yes, trade based on confluence for confirmation. Okay, if your indicator is telling you one thing, the chart has to tell you what your indicator is telling. Like you need to have multiple confirmations before you take a trade. Okay, let's look at gold. Like I said, guys, the market for gold is closed today, and the market is currently less volatile at the moment. Okay, we'll go to the higher time frames on gold. Okay. Resistance level is already identified. 2078, which was created on July, and price came back to test that resistance level in March 2022. Right. I can clearly connect swing lows on gold right now. And I'm going to say gold is actually at a selling zone right now. Gold is actually at a selling zone. If it successfully breaks above this 1980 to 1985, then I'm expecting gold to make a retest at 2000, probably next week. So if this rejection does not work out and gold does not break above this point, let's say it doesn't break above, if this rejection does not work out and gold does not reverse, then I'm expecting gold to actually make a retest at 2000 and the previous key level, which is 2066, 2070. Okay, otherwise in the case of a rejection at this point, then I'm expecting gold to get back down to 1915. That's in the case of a rejection, actually. So if there's a rejection, if I see confirmations on rejection on gold, this is on the daily time frame, guys. So if I see confirmations on rejection on gold, then I'm expecting gold to get back down to the 1915, 1913 zone in the coming weeks. Is one breakout enough for confirmation? You get strong confidence to trade a breakout when you see rejections at the retest of that breakout. Let's say, for example, and the reason is so that you don't get faked out, right? So let's say, for example, price breaks out of this zone. You get more confidence if, oh, I think I used it wrong too. Yeah, so let's say price breaks out of this zone. You get more confidence to buy when there is a rejection at the retest. The retest is going to be at this point here. And then when you see rejection candlesticks, you see all those pin bars and hammer, and then that's going to give you like an extra confirmation that okay, you can go long. If it breaks out to the downside and there's a retest, you get an extra confirmation that you can go short. Okay, so yeah, after you break out, you can just wait for a retest to get extra confirmation. If you choose to just trade the breakout, then I would advise you, or I'll tell you to just put your stop loss tight and apply good risk management. Should there be a fake out, so you don't get caught up in a fake out. A fake out is when price breaks out of a zone and it doesn't continue to break out, it just drops back down. So that's what a fake out is. So it breaks out and then it doesn't continue in that direction, it just drops back down. So if you trade immediately after a breakout and you don't use a tight stop, or you don't use a trailing stop to guide your trades, in the case of a fake out, price is just going to reverse and close your positions for you. Okay, so I'm just going to look at the chat or the comment section for questions. I said I was going to analyze gold last, so I'm just going to take like 2-3 questions and we'll wrap up. GBPUSD, I've analyzed GBPUSD. Okay, how do you apply the news on your trade? Because you did not talk about news in the previous pairs. What I said about news is that the news influences the currencies, right? If a particular country, let's say the economy of that country is not strong, or the country is not politically stable, if the news or the reports of that country is negative, let's say unemployment rate is high, it's going to have an impact on the currency, right? You're trading currencies of a country. The currency and the economy of that country are related. So the news gives you like an overall idea of what is going on in the country and how it can affect the currency of that country. Okay? I don't have any questions. Okay. What is the best time frame? Okay, it depends on your trading style, right? It depends on your trading style. I mean, if you're a scalper, you can just do your top-down analysis and go to the lower time frames to look for entries. For a swing trader or a position trader, it's just focused on the higher time frames. Probably get entries from 30 minutes or 1 hour, but position traders are focused on higher time frames. That's why they call position traders. They hold the trades for a long period of time. So is there any best time frame? I'm not going to say that there is a particular best time frame. I'm just going to say that if you look at how you trade, you can determine what time frame works for you, but you can't do without the higher time frames, guys. Like, you need to always analyze from the higher time frames. They give you like an overall direction of where the market is going and where the market is coming from. Okay, guys, thank you so much, Ambrose. Thank you. Okay, guys, thank you all for joining me today for this live trading session. I'll see you guys in the next one.